What an ending. I cannot believe what I just witnessed. My name is Hamilton. I'm here with the Trading Initiative. Let's go over this week's action wrapping up May 31st, 2024. First things first, wow. Today was not a great day. Data came out, core PCE numbers. The market seemed to have liked it pre-market. Didn't really like it as much as we had expected, to be completely honest with you. You know, tech was up slightly. We saw bonds up. We saw the dollar down. But we really weren't getting the push that we expected we were going to get off of pre-market. And so we kind of had some tempered expectations coming into today's session. But we did not expect to have some sort of dramatic sell-off either. Obviously, yesterday was a pretty destructive day, particularly for Mag 7 and tech stocks, software stocks, internet stocks. But the broader market actually held up pretty well yesterday. And so coming into today, we were thinking maybe there was going to be some continued weakness potentially in tech if the market didn't respond well to PCE. But at the beginning, the market did respond well. And so to tell you that I knew exactly what was going to happen today would be a lie. And I think that's okay. I'm not a day trader, so I don't particularly care too much about intraday price action. I focus on week over week, month over month, right? The close nose is kind of how I was taught. But I'm not going to sit here and tell you that I wasn't thinking about what was going on today. Listen, the Qs were down nearly 2% at one point today. I'm kind of showing it to you here on the screen. 2% on the day is a wild move. As a matter of fact, if we bring it out onto the daily, we use an indicator called the average daily range, which gives us an expectation of, from highs to lows, how much does something normally move in a day? The Qs move around 1%, 0.99 per day from high to low. Today, they moved nearly a little over 2%, which is a 2x ADR move. This is not normal for an index to move like this. And so once again, to say that I was expecting this, I don't think anybody expected as big of a sell-off intraday as we saw in tech. And that's really what was leading it, was the sell-off in tech. As a matter of fact, you can see the 1.11 ADR here, and tech really got slaughtered today, at one point down 2.4%. So another big move. This is a big deal, guys. It was a big deal intraday, particularly because it wasn't just Mag 7 that was getting hit this time. Yes, names like Microsoft were down. As you can tell here, they were down quite a lot. This is a big move for a mega cap stock, but also other names within the industry groups were moving as well. If we bring this over to the sectors tab here, you can see semiconductors took a little dip down, bounced off of a previous level here that we were expecting would come as support, but we didn't expect it was going to get tested today. As a matter of fact, generally when you get these violent moves down towards supports, they don't hold, at least in the short term. We were expecting a potential flush through it. Instead, we found support exactly where we would have expected to find support eventually. It just came in today. That's okay. No harm, no foul. Just came a lot quicker and more aggressive than we expected. Check out the internet ETF. This does not look great, but the candle on the daily does show a reversal style of pattern. We're currently oversold. This is a very bullish candle on a daily time frame. Having said that, though, internet was very close to hitting new intra-year lows, right? I think last time we were down here was late January. Yeah, I mean, multi-month lows coming in on internet stocks, and then software stocks as well below their 200-day moving average. And even though today was a big reversal day, we're still below the 200-day moving average. So I'm about to paint a bullish picture here when we look at the monthlies in a second, but I want to point out that I don't think anybody was expecting this dramatic of a sell-off. People always look to, why does stuff happen? Why was there this big dramatic sell-off today? And I think that's the wrong question from a technical standpoint. If you're a technical trader and you're trading based off of price, you're using charts as kind of this map of price and figuring out trends and where you want to be long and where you don't want to be currently allocated in the market, the whys don't matter as much as the whats. There's probably a million reasons why we're going to figure out everything happened over the weekend, but those guys are trading the other side of the equation. PCE numbers came in line. The market probably should have liked that, considering yesterday PCE numbers came in a little soft and the market loved it, but it didn't. Give me the reason why. I didn't trade the reason why. I don't really care, but somebody's going to tell me why. Why was there a big reversal today in some of these stocks? They were down huge. It could be due to end-of-month window dressing. You guys are probably going to read about that. Funds reshuffling their allocations, particularly around NVIDIA. Maybe a bunch of these funds are too heavy into NVIDIA, considering it's up so much. And so they had to sell off some of their tech exposure, rotate it into some of these undervalued areas like energy, which closed up the most at 2.49. Who would have expected energy closing up nearly 2.5% on the day. Not many people, especially because U.S. oil was down on the day. This was a challenging day, especially if you were trying to day trade something like this, because a lot of these sectors weren't traditionally moving in the same directions that they normally would. As a matter of fact, let's talk about that really quick. If we flip on over to the dollar was down for the most part. All right, dollar's down. We like that. Equity market likes that. But the market has found, or the dollar, has found support across this 200-day moving average all week. In a rising equities type of world right now, in the inverse relationship that we have here with the dollar and the equity market, we want to see the dollar continue to potentially break down below the 200-day moving average. We've talked about this a lot. If this breaks below the 200-day moving average, it's going to give the equity market a hell of a lot more oomph as it breaks out into new highs. The fact that the RSI is stuck below the 50 is awesome if you're expecting the dollar to continue to break down. But if you're a dollar bull, you want to see the RSI flip back over the 50 and start trending to the upside. That's what we would consider a bullish momentum regime, and you'd probably see the dollar break here. But it hasn't done either. It's kind of been coasting sideways for the last week and a half, finding support at the 200-day moving average, which really convolutes the trend here because a lot rides on the dollar. As a matter of fact, I would say the dollar is probably the most important chart in the market, and it has been for an extended period of time. The market responds to the dollar, not the other way around. Bonds, on the other hand, caught a bid, and they were bid all day. Not saying that this was the strongest day. We didn't really move a whole lot off of the open. There wasn't a really big range here, but the dollar got bid off the PCE drop, and it closed up 0.68. So once again, it's that kind of magic formula where the dollar's down, bonds are up, and equities tend to follow bonds in that equation. And so obviously equities are up. Now, I want to say obviously because that's how we normally trade it. That's been the relationship for an extended period of time now, going back maybe 2 years. But to say that obviously we expected the Qs to close up, I had no idea. As a matter of fact, up until about 3 p.m. Eastern Standard Time, I was looking for a pretty big down day. Most people inside of TTI were down on the day because we're long some of these leading sectors that were getting hit. But I want to point something out. If we flip over to the monthly here and we focus on the close as swing traders, if you're not a swing trader, this part is not going to make a whole lot of sense to you. You're not going to care. But as from a swing trading perspective, meaning we don't necessarily want to be playing in intraday volatility. That's not the time frame we care about. We care about overnight moves and trends that tend to persist from at least 1 month to a few months. That's kind of our window of operation. 45 days to 180 days is our sweet spot. I don't necessarily care what happens at noon on a Tuesday. I don't care. But if that's your time frame, that's totally okay. Now you're going to listen to my time frame. We have a bullish engulfing on the monthly. This adage of sell in May and go away. Everyone wants to sell stocks and make sure. I want to point something out here. First off, if you're a part of TTI, the newsletter went out that shows you the stats from June through August of presidential election cycles. Those are the best 3 months out of the entire year, statistically speaking, going back to 1929. June through August, the most bullish 3-month period during the 4th year of a presidential election cycle, going back to 1929. You have the data set in front of you. Go check the newsletter. If you're not in TTI, well, you're just going to have to believe me or go look it up yourself. It's out there floating around. It's freely available to you. Having said that, we had bullish expectations coming out of May. We expect June to be bullish given that seasonality, but we weren't seeing it. So we kind of had this internal conversation inside of the community. What are we going to do? How should we be prepping for a potential drawdown coming into June? And then today showed up and we were like, we are for sure probably going to end up starting in a hole in June. And it just shows you that you can't ever tap out early as a swing trader. You have to focus on the close. And what did the close give us? The close gave us a bullish engulfing on the monthly. And guys, if you know anything about candlestick theory, and I don't necessarily put a whole lot of, oomph on this. It's not like the biggest thing about my system. But there is statistical edge when you're looking at large data sets, which obviously monthly candlesticks are large data sets. You have an entire month's worth of candle or an entire month's worth of price action. It is now eclipsing the weakness we had in April. Statistically, that is a bullish candlestick formation here. More often than not, the next candlestick that closes, meaning at the end of June, is going to be higher than the one that closed in May. Meaning, for everybody that was prepping to sell in May and go away, which is the old adage, they may have sold at possibly the worst time, because if we gap up or something in the first week of June, statistically speaking, that could be the beginning of the next leg up. I don't know if it's going to happen. We are positioned that way because of the bullish push. We're in a primary uptrend. We're in the second year of a bull market. It's not necessarily the easiest market this year to trade. I thought last year was a lot easier. Having said that, we're playing true to our system and we're remaining long as the market seems fit. And now here we are, end of May, with the bullish engulfing posted on the Qs, which obviously that's all of your tech, right? Tech, communications, consumer discretionary. Those are the higher ADR, higher beta names, but SPY as well. There you got it, folks. You got the bullish engulfing on the monthly in the S&P 500 as well. That means it's not just tech that's pushing this up. It's not just tech that looks good here. As a matter of fact, tech looked terrible today. It was scary to own tech, so it couldn't have just been tech that looks good, right? And I'll prove it to you. First things first, let's check out financials. On the monthly, does that necessarily look terrible, hanging out at all-time highs for financials? Probably not the worst. As a matter of fact, financials performed very well today. We had some really good wins in financials. As a matter of fact, Bank of America closed, I believe, near a 52-week high, and it did hit an intraday 52-week high today. That's a very good position that we're in right now. JP Morgan is pushing back up into all-time highs. So we have exposure in the financial sector, and they are continuing to push here. Materials, we have some lighter exposure here, hanging out at all-time highs, right? So there are other areas of the market that are pushing up as well, holding that all-time high type of temperament. It's not just tech, but tech doesn't look terrible. It felt terrible intraday, but there you go. There's the bullish engulfing on tech. Once again, if you can kind of take a step back and think to yourself, there's always a million geopolitical risk, U.S. debt, the shit going on right now with Trump and Biden, like all of these different things. But if you step out and you just view price as it is with no other opinions or bias, this does not look like a market that is about to roll over into new lows, guys. It really doesn't. Having said that, I'm going to continue to say it because today was a roller coaster of emotions. It was not particularly easy to hold through the moves today. As a matter of fact, a bunch of us just said, listen, we have stops on the books. It's time to take a hike. Let's go eat lunch and we'll reconvene during power hour. And that's exactly what we did. We flip on over really quick to FinViz here. I just want to show you the heat map of how things actually finished. As a matter of fact, things finished pretty good. But the crazy part is most of this positive price action showed up, at least in the Mag 7 stocks, within the last 45 minutes of the day. Prior to the last 45 minutes, all of those big squares were red, which is pretty crazy to see. It's been a long time since I've seen essentially a 2% move intraday off the lows in one of the major indexes. That is not a normal type of move. So that is going to influence people's decision-making process coming into June. If you closed bullish in May and shorts got their faces ripped off intraday, which it looks like if you were unable to cover your short at the lows, you had zero opportunity intraday to get out. As a matter of fact, I'll show it to you. Just go to SPY on the 1 minute. You had zero opportunity to cover your short if you did not get it at the lows. Listen, this is a time frame that I don't mess around a lot with, so I totally understand the allure of day trading. But man, this is one of those scenarios where it's kind of a nightmare, where if you weren't covering your risk and you weren't able to get out at a reasonable cost, this is one of those doomsday type of moves. This is something where a swing trader or a longer term trader lives for. I mean, almost a 2% move in the indexes off the lows is not normal, but it is very bullish in the intermediate term. It's something that we want to look forward to in June. And once again, that June through August window is something we're really looking forward to taking advantage of. Really quick, a couple stocks here that I want to point out that I think are ripe for potential buying, stuff that we have already positions in, and I think that there's still an opportunity to own it. My favorite one to own right now is App. Once again, this is a software stock, so it felt like it was going to get crushed today, and it did, right? The premium on the contracts that we had bought came down from like almost 100% win down to like 0%, so it was a very soul-crushing move intraday. Pop back up, we're somewhere back up in profit, but as of right now, we like this hold up until, at the very minimum, the $100 price target. A couple different ways that you can attack this chart. I'm not going to go through all of them because they're on the website. If you're interested, feel free. Link is in the description below. But this app chart, it's very bullish. We've been long since the 45 pivot. We're currently consolidating in a little bit of a pennant here. We're expecting a pushback up to 100 and possibly beyond this name. Hood's another one that we really like, and we have a bunch of exposure in. I know we've talked about it a lot. It got hit as well with everything today. One thing I want to point out, because we're talking Hood, Bitcoin and Ethereum didn't really react a whole lot. Right at 11 a.m., Josh and I went on air. We were talking about some of the crypto setups we liked. So if you're trading crypto, you have some money in your account that's sitting there with free powder, I would highly suggest go and check out that quick. I think it's a 20-minute video we recorded earlier. 11 a.m. It's on this channel right now. We looked through ONDO coin, we looked through BNB, and we looked through Rise, one of the other. All three of them applicable setups. Really, really, really like the ONDO setup because we're already in it and we're adding into the winner. So it's a good opportunity. Having said that, Hood did pull back with the higher beta tech stuff. Makes sense, but gave us a pretty okay close here on the monthly. You can go ahead and check it out. This is not a necessarily bad close, guys. Once again, this is damn near. It is. It's a bullish engulfing. We have 3 current positions in Robinhood. 2 of them are free. 1 of them is around break even after today's pullback. Look at the volume. Look at the candlesticks. I'm telling you, get your mind out of the gutter in terms of every other bullshit thing going around and just focus on the charts. Not everything's going to work that you buy, but if you buy strength more often than not, particularly in a bull market, you're going to end up making money in the long run. I mean, it's the power of primary uptrends. People want to say you only make money in a bull market. I would counter as saying, why are you not friggin' long in a bull market? Seems like a pretty easy trade to me, and I don't need to have my name on a pedestal or in a movie for taking the big short or whatever. I'm just in it to make a couple bucks. Riding primary uptrends is a great way to make some money. So guys, my name is Hamilton. That was a really quick little markets in focus here. It looks really good. I'm bulled up. I'm sure you've seen it in the newsletters that we've put out. If you're not already on that, 7 a.m. every morning, I send out a newsletter with a scan filled with stocks that we're looking at. It's completely free. If you don't like it, just unsubscribe. You're not going to hurt my feelings, but it shows you what we're looking at. We're up this year rather large. We've made some pretty good decisions. We have not bent the knee to the shorts. We're not bearish because price isn't screaming that we need to be bearish. Once again, my name is Hamilton. I'm here with the Trading Initiative. If you like this type of content, please like and subscribe. Leave a comment below. I am on vacation next week from YouTube. I think I'm going to upload a video on Monday, but I'm going to be gone for the rest of the week. I encourage you guys. I will still be sending out the newsletter, so sign up for that. And I'll see you in your inboxes at 7 a.m. every day next week. Enjoy your weekend. Stay safe.